The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour, this tax day, 15th of April, and my pleasure to be here Monday through Friday, except this week it'll be Monday through Thursday because Friday's Easter holiday, Good Friday, and, of course, today being the first day of Passover. It's going to be a quietish volume day, but certainly not a quiet day in the market. The Dows are started off a little bit of a gap to the upside and then screamed higher. The E-minis went right to the 9-period exponential moving average, which is at 1836. The high today is 1837.25. Exactly. And then plunged. And then went down negative. It's down 225 right now. I mean, this is terrible action. My thinking was that after the two parallel sessions, basically looking at the A to B equals C to D, pretty much, wow, almost exactly, maybe a few points extra if you're looking at my charts. The chart on the left is the daily of the E-mini, S&P June E-mini. The one on the right is the 120-minute chart. Look, it went from 1892 down to 1830, bounced up, and then the perfect 1867 down to 1803. Which is maybe, as I say, maybe 3 points a little longer than the exact A to B equals C to D, and it's the technique that I call a Chapman wave one-to-one extension in price and time. One of the reasons why I call it a Chapman wave is because in this particular instance, it takes the diagonal, it uses it as a time reference, even more importantly than price, and it did it perfectly to the exact day. And the bounce came just as I expected, except I was anticipating for my subscribers the reverse, that we would see early weakness and then a rally, not early strength that continued all the way to the 9-period exponential moving average and making a peak D, oh man, in a beautiful left side, right side price time match in the 120-minute chart, which I had drawn for subscribers earlier on when it wasn't even close. It was that bar over there, with that dashed pink line as the target. I call it the Chapman wave inside wedge target line. And it went right there. And then it pulled back. But pulled back, I thought it would pull back, hold a 9 EMA, and then move maybe to an E, because we were deeply oversold by any traditional method of analysis, except for one little thing. You see the big distance here between the fast-moving average and the slow-moving average? Instead of turning up and then crossing positive tomorrow, look how wide it is. Look at the beta. Look at the distance from the 0% line to the downside. That's a pity. And instead of going to 20%, which it was close to doing in the stochastic, it's down back at 15%. So very disappointing. So let me just run the numbers. The Dow's down 35 at 16,137. The S&P is down 385 at 1826. The comp index is down 36. I had a quick question. Let me just do this while I'm thinking about it. The question was about the comp index. Let me just show you something very interesting here. $COMPX. That's how I get the rather large 2,000 stock composite index on the NASDAQ. This is a peak D. If there's no new high in April, I see absolutely no reason now why there should be. We're sitting on the 9-period exponential moving average. There's just a real good chance that that's a peak D. The MACD has turned down, but it's still at 90%. That's still very good. And that's the stochastic. The MACD's fast-moving average has turned down. Relative strength and on-balance volume have turned down. Sitting on the 9-period exponential moving average, we're going to watch that real closely. Now, let's just go to the weekly chart. The weekly chart of the comp index, and this is the very broad. I mean, this is not the 100, NDX 100. This is the I think it's 1,800 or 2,000 stocks. The question is, where do I think it's going? I think it's going to test the left side low of 39.68 made the week of the 7th of February. And, I just wanted to see what that looked like. I've got some new, I've upgraded to the latest iteration here. Let me just see if I do that. How much color can you see? There we are. It's coming up right now. So the comp index low of the 7th was 39.68. And that 39.68 level says if it takes it out, we could have a very quick slide that would take us to the first or second week of May. And the first or second week of May would have the low in the area of 38.99 to 38.55. Wow, that is really something. If it does that, and it does it with speed, that would say that this is a traditional. Now we've gone into bear phase. We're going into bear phase, which means that every single rally is doomed to failure. Not only is it doomed to failure, but lower highs and lower lows are the norm. And in fact, the weekly chart is absolutely in sell mode. The monthly chart is very close. I have to wait for the month to finish, but if it closes under the 9 EMA, there might be the start of a sell signal. That'll be the first time we've got a sell signal in the composite index since back in 2011, in May of 2011. Isn't that interesting? So, okay. Now, so going on, we've got gold. Now, look at this. This is very interesting. Let me just get this 120-minute chart back up here. Gold. So the question was, where are we going? And the answer is that if there is no rebound today, the low already is at 39.86. The low that we're talking about that I was mentioning from is 39.68. That was the low made on the 5th of February of this year. And we're very close to that. And that the 9-period exponential moving average is 39.48. MACD is still expanding, and the stochastic's flat at 10%. So there's a good chance. So we've got all that out the way. I just want to quickly get the gold, and we've got a bunch of callers on the line, so let me just finish this up there. Look at gold. Gold made a peak D in the daily. It went right to the 200-period exponential moving average. I've been talking about this for a couple of weeks now. I've been saying if there's a cup formation or a V formation, the real test, let me just have something to drink. Aha. The real test will be how does gold, as the contract itself, handle the 200-period moving average at 1331. Remember, I said my target on the upside, maximum target I'm thinking of in this particular time frame will be 1328.29 to maybe 1332.33, and 1331 is the 200-period exponential moving average. Gold itself went to 1331.40. Boy, that was close. And now it's made in the daily. It's made a peak D, not a bad candle. And it did almost test the low of the 4th of April, which had 1303.50, and today's low is 13. Wait, that can't be right. Hold it. That's not the low. 1284.6. No. 1281.90. I'm just getting used to this. Sorry, folks. 1281.90 was the low on the 3rd, and that is. And 1284 is where we went to today. So a little bit of a bounce. Now look at the 120-minute chart. This is really interesting. In fact, we had someone in the den talking about buying the bottom, buying the low in gold. Great. This is a Roman candle in the Chapman wave methodology. It says that in the next 2 days, if gold touches 1290, let's call it 1290, there's just a really good chance it's going to retest the low of 1294. It can't be 1294. 1284, which is the low today so far, 1284.40. But if it's able to close above the candle, the wick of today, the high, let me just move this up so I can get a clearer view. I'm not used to this at all. This is it's 1301. 13. Good grief. How am I going to read all this stuff? 1304. 1304.20 is the high today. If it's unable to close above that in the next 2 days, it says trading range, rectangle at best, test the low at worst. Not at worst. Test the low is a possibility. Okay, so that's gold. Silver is now down 49 cents at 1952. Crude oil is at 103.79, down a tad. Bonds are up a half point. Dollar is up a little bit at 79.83. And we're going to our first caller. We've got Nahid in Safety Harbor. Hi, Nahid. How are you?
Good. How are you doing?
I'm doing well, thank you.
Can you please look at Tesla? It was a great call by you yesterday, and I have it put, and I just want you to look at it. I don't want to lose all I made.
Right. You know, I have to tell you, everything worked for Tesla on the upside. There was nothing that Musk could do wrong. On the downside, it works the same way. So I'm suspecting that what you're really looking at here is that Tesla, TSLA, trading at 191.70, down 6.39, it has no choice, but it has to give back a chunk of the gains that it made, especially the most recent gains. And the recent gains I would put at not 136.67 was the low back on the, although you'd like to hear that, the 14th of January. But basically this area between 186 round number high that was made on the 31st of January, and the low a couple of days later, 169. So that'll be 186 to 169. It's trading at 191 right now. So when I put that together, then I also draw a downtrend line. It's really like that falling axe I usually talk about. This is the bottom part of that. And that's, and that says that there's now a greater chance that Tesla can test the 180.47 low of that trend line. If it breaks it, looking out, and I'm not talking about it, maybe it'll be real quick because it's really coming down it's like gravity. It's just the rug has been pulled and gravity's taken over.
Right.
But my suspicion is it will have a little bit of a bounce, maybe from 191 to 196. I don't know if it'll get to 205.82, the 9-period exponential moving average. But I have a target that says Tesla should get back, and if it gets back anywhere below 180 at any point, even if there's a bounce after that, the 168 to 166, where the 200-period simple and the 200-period exponential moving average are, that would be to me a very strong target area and a very strong bounce area. So now, because you're talking options, I'm going to do two things. One is I'm going to suggest to you that some part of your positions should have like a trading stop on some part of the position just to really lock in the gain. But I would try to hold a core position, and you're out in May, right?
Yeah.
Hold on, we've got a break coming up. I just need to think it through a little more carefully based on the 8 pattern. I'll be right back with Nahid and Danny.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
TFNN is back with another Tiger Dollar special, and as part of this promotion, not only can you receive up to a 25% bonus on whatever you spend, but you can also gain access to a 5-part live webinar series with Tom O'Brien taking place the week of April 28th. Each morning during the week at 8 a.m., Tom O'Brien will walk you through how he sets up the market live and digest the previous day's trading action while analyzing overnight markets abroad in order to anticipate what kind of trading day to expect. Each 60-minute live morning webinar will be archived by around 9:30 a.m. that very morning, so that if you can't attend live, it'll be available for your viewing pleasure on demand whenever you're ready. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire. So now is a great time to lock in extra savings on all TFNN products. Don't miss out on Tom O'Brien's 5-part webinar series. Get your Tiger Dollars today with up to a 25% bonus on whatever you spend before this special is over by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. So we're going back to Nahid's question about Tesla. I would do a couple of things here. One is I thought it through during the break, and I'm convinced that there is enough internal support in the general market to say that the downside, while it looks ugly right now, is somewhat limited. But because the 9-period moving average and the 2 different moving averages on both the Dow and the S&P have been reached, and the E-mini, so it makes the upside limited, but it doesn't say that there can't be upside action. So I'm going to do this. I'm going to suggest you think about taking some profit in some of your, you've had a really good move, and it's very unusual in options to have this kind of, especially on the downside over the past year or two, to have this kind of gain on the downside in such a quick move. So you don't have to do it, but just think it through. I would try, you're getting almost to the penny, the maximum in the put position at this particular point. Maybe it's just a fraction off the top, but it is really good. So, and the 120-minute charts, it's really close to at least a bounce. I'm going to suggest that you think about taking at least a little bit off. You keep your core position. The reason why I want you to garner some of that gain and have it in your pocket is that when you put that position back on again, and I'm going to suggest you try to do it above today's high if you can get it. So you're not talking that much in points, but you are talking that much in premium, so that if you get it back at your put position at a lower price, it gives you a little more room in which to, you know what I'm saying? It gives you a cushion. Now you've got some cash and you've got a profit, and it gives you a bit of a cushion so that you can add to the position. So either that, or you could stay in this position and say, hey, this is a great position. I think it's going down further. My target actually is the 9-period moving average in the monthly chart of 174. How it gets there, I'm not sure, but that's my target, and I think it'll be there before options expiration in May. And at the same time, bounces are to be shorted in Tesla. I think there's a change in the thinking about Tesla. I think that it was pushed to this last high, and my suspicion is that there's going to be bad news for Tesla for at least a little while, and you're going to be benefiting from that. So either you could take a little bit off now and you're going to be putting it back between 198 and 202 or 203 if it can get there over the next few days.
Okay.
Or you just say, you know what, I like this position. I will actually add more if it bounces. But I'm saying not a bad idea psychologically. Take some of your profits, put it in your pocket and say, you know what, I'm prepared to put it back at a better price and give myself some comfort. So that's the way I'm thinking of it. But looking out, I think it's going lower.
Well, I just was listening to you, and I took half of my position out, so I am good.
Okay, so you got some cash in the hand. That's very good. And now that's the one that and now I would say if you've taken half, you can use a quarter and a quarter for your repositioning on any big rally, okay?
Perfect. Thank you so much,
Hey,
Basil.
congratulations, Naheed. You are our example. You've become the Tesla lady.
Thank you very much again.
Thank you. Let's go to Danny in Atlanta. Hi, Danny.
Hi, Basil. I wanted to ask you about the gold contract. I don't know if you have anything more to say about that.
You know what? I'm pleased you actually asked me a little bit about it because I'm looking at it. And I wanted to get a bigger picture of it, so I wanted to move away from the shorter-term 120-minute chart. I wanted to move away from the daily. I wanted to have another look at my weekly chart and to discuss it a little bit more in detail. So good idea. Now, do you have a position, or is this more a query?
I don't have a position. I'm looking for the entry point.
Okay, so the entry point, you wouldn't mind whether it was long or short, or you got a bias?
I have a bias toward the long side, but I'm willing to play short-term. Short.
Okay, so let me do it with just a clear mind. At this particular point, I have no bias either, other than to say, looking out. My bias is that this particular this particular H pattern that goes to an M formation invariably tests the low and will break the low at some point. So here we go. In looking at the weekly chart, the 9-period exponential moving average, and I'm pleased that I'm getting a chance to do this. First of all, folks, you'll see here, if you're looking at the charts, this is the weekly. Let me just have a double check here of what I've got. Yep, you can see it nicely. So this weekly chart, you see the pattern up here that looks like an H, lowercase h, and then it becomes an M?
Yes.
Well, in my CD introducing the Chapman methodology, I talk about this pattern a lot, and we know that from experience, talking about the gold contract, the monthly chart, way back, we were looking at the gold contract making the H pattern to an M pattern way at the top, and then it broke down and did more than a one-to-one to the downside. We've got a break coming up. I'm going to do a little bit more work because I want to also double-check with my continuous contract. Dow's down 19, S&P's down 3. I'll be right back with Danny in Atlanta straight after this break.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We are back, and I've spent quite a bit of time during this break juggling all over the show, currencies, etc. So we've got Danny on the line, and we're looking at gold right now, down 26. Let me just double check. I'm a little behind. Down, 26 at 1,300. So what we're looking at is this. I needed to have a look at the, and I'm actually now on the continuous contract, and the continuous contract says that, and it's trading at virtually the same price. So they match. It says that on Thursday afternoon, that's the last trading day of the week. Now, overseas, you might find that gold will trade because the foreign markets, the foreign markets are closed as well. So what we're looking at here is that the 9-period exponential moving average at 1313, I think this week is going to be absolutely key. If there is a close above 1313, especially a strong close above 1313 in the gold contract, now we can start looking at the chance that it's going to try for a leg C up at the 1403 level, where the 200-period moving average is in the weekly chart of the continuous contract. And as I say, at this point, they're within a point of one another, the continuous contract and the current, the June contract. And I'd say that my guess was that, we're going to watch out for peak B, but there's a chance that we could still go to a C, but I'm not sure we're going to go to a D in this particular pattern. So what happens very often is that if the second pattern fails to take out the high of the first pattern, which has a high of 1433.80, you can tell I'm getting used to this, 1433.80, back in the week of the 30th of August, if that, in fact, is taken out, that's going to be very, very important, because it would take you to that 1403 level. And also breaking above the left side high arch becomes positive as well. So that tells me that I'm at this particular point on the daily basis, I'd be neutral to more negative, although it's a very nice bounce. And congrats to our Denner, who just picked up right almost at the low and has had a great moves up since then. But I'm looking at it and I'm saying, you know what? There's a little mini H pattern, and patterns repeat. You know, they're fractals, so the fractal becomes the exact same pattern but at a smaller size or distance, but it's the same kind of pattern. And I'm saying to myself, well, if gold takes out the low of 1281.40, then it's probably going to test the low of 1277.40. That was the low back the week of the 4th. So here's my answer to you. I don't know if I would be going long right now, but I'd let the weight of evidence say that if gold gets to, it's at 1301 right now. In the next 2 days, if it starts to trade at 1309 or better, above the 9-period moving average, that would be really positive action after today's early sell-off. It would be very positive and say, good chance it's going to go test the recent high of 1331. 1329 is the 200-period moving average. So that's all I can suggest to you, that if gold goes to about 1310.50, 1311.30, I'd say, okay, I'd start a small position on the upside of gold. Right now, my bias is to say I'd be real careful, because if it takes out, if this is the candle's low today, where it is at 1301, anywhere from here to 1304, if it closes somewhere there, then that long wick to me is always a fantastic clue. It's what I call the Chapman wave Roman candle, and that says a test of halfway of the lower wick of 1293. Go below that, and you're liable to test the low. So those are my parameters. Right now, I'd be stepping aside with my mental bias being saying I think it's going to go down, but the physical act of it going above 13, as I say, 1310.5, 1311, that would be a positive, big positive to me. A breakdown would say I'm thinking it's going to go test the lows, and not only will it test the low of 1284 of today, but if it takes that out, it's going to test the low of the other day, which was at 1277.40, the low of the 1st of April. So I'm being fuzzy right now. I have no choice. The 120-minute chart, when I look at the 120-minute chart, very nice bounce, but the MACD is still very ugly, and the stochastic is just turning up, so that's a positive sign. I can't do anything right at the moment. I can only give you those parameters. So I hope that helps you. And I think within another 2 days, we're going to get a real good sense of whether gold wants to retest the highs or if it wants to retest the most recent lows. And I don't think it's just going to mess around in the middle here. I think it's going to make a commitment one way or the other. So I hope that helps you. Well, it doesn't really help you. It just gives you an idea of the levels I'd be looking at.
No, it does help me. And if you have time later on in the show, can you look at silver, please?
Okay, let's do that right now, because I don't see anyone hanging. No, there's no one else waiting, and I'd like to do silver because it too made a peak D in the daily chart and Chapman wave methodology. What we look for, the lowest, most identifiable low bar. If I'm looking at silver, I'm looking at the GDX. Let me go to the silver. Sorry, that was a GDX, made a peak D. Silver, I believe also did, but I haven't updated. Yep, there it is. The SLV is the one that I should update, and that's gone peak A, peak B, peak C, peak D. That's what we look for. 4 higher peaks, and that's where you got to be careful of. And it took out decisively today the left side low. And, you know, I don't think that gold can bypass that. I don't think that gold can just ignore what silver's doing. If silver's really lagging, it's like our indexes. The Dow can't do it by itself. The 30 stocks can't do it by itself. It really needs the accompaniment of the composite index and the S&P and the New York Stock Exchange. So I'm looking at this and I'm saying, boy, I've been talking about this for a long time. That monthly chart in silver is just not an attractive chart. It is walking the 200-period moving average. I think it's going to go lower. So silver to me is not only the weak link, but it is the tell. And if silver in the weekly chart takes out at any point, because it moves so quickly, I'll give you the actual low. If it takes out 18.26, it's at 1882 right now. That was the low the week of the 3rd of January. That is just going to set up that monthly chart for that H pattern with a major test into the 1775 was the low in June of 2013. So the pattern I'm looking at now says don't get too carried away on the short side, because very often it makes this arch formation and then a little M, and then there's a test. And if it's a successful test, in other words, if it doesn't close on a monthly basis under 1775, silver can go back into the rectangle pattern and frustrate for another 3-4 months as it doesn't break down, but it doesn't really break out. But if at any point silver hits $16.30 or $16 in the next 3 to 5 weeks, that is really going to be very negative action. So my bias, as I say, is towards the downside. I still don't know if we will make that leg C to the upside on the weekly chart. My thinking was that we will not make a D, but I thought there was a chance of making a C. So far, those are the tells that I can give you. Now, silver, this is the SLV. Sorry, I didn't mention that I'm looking at the iShares of the Silver Trust. If I go to SI, I think it's the K contract that people are trading right now. That did make a peak D in the daily. There it is, the low bar. Now we go peak. Oops, that's not an up arrow. Shouldn't be there. That should, come on. That should be an A, then a then a B, then a C, and then a D. And it's plunged. And it's that Roman candle in the silver contract as well. Got to be really careful with these candles. Actually, let me just be real clear. The Chapman Wave Roman candle, the one that looks just like this on the silver chart right now, that's what is very negative coming off highs. The third bar or fourth bar, if it looks like this on the downside, good chance you're going to make lower lows and lower highs. When it happens at the bottom, that's why I'm making a big deal about how the SLV contract handles the 200-period moving average in the monthly chart. If it happens at lows, be careful, because sometimes the bottom of the candle becomes a very strong support level. So that says 19.22 on silver, better hold, because if it pierces that decisively, it's not going to be a good sign at all. This is usually where you get some kind of a bounce on the Roman candle when it's to the downside after a lot of action with low lows and lower highs. So what would break out to the upside? I'm going to make it real obvious. Is the candle, the doji candle of last week. It's a smallish doji candle. So it says that a close underneath the low of last week is negative. That's under 19.60, and a close above 20.40 would be a positive, and that positive would be for one more week, and then it comes back and tests the body of the candle. So I hope that helps you, gives you some sense of what I'm looking at. And one of the reasons I really looked at the DZZ, I was thinking of trading that, and I just don't have an edge right now. I can't be fooled by one day big moves to the upside or downside in this market. The major trend in the market so far continues to be down, and in gold and silver continues to be down, and we're going to just have to watch this real closely. Hope that helps you.
Thank you, Basil.
Thank you very much for calling. Always appreciate it. So, folks, a couple of things I want to look at here. I like to spend a little time on the VIX index. The VIX, the volatility index, went right down to the 9-period exponential moving average support at 1554. The actual low today, let me see, the actual low is, in fact, 1557. Hey, that's pretty darn close. Now it's bouncing. If this market ends really ugly today, in other words, it's ugly enough as it is, but if the Dow goes from minus 37 to minus 65 or more, and the S&P, which is holding way better than the Dow right now, only down 5, actually they're in line. If the S&P closes down 7.50 or more, that volatility index, the VIX, is going to climb above the high of B. It's going to go above 1785. 1786 starts leg C. Then you got to expect a D, although there's no guarantee in the volatility index that it always goes to a D. But wow, having held so well, walking the 9-period moving average, I've got to tell you that that's a possibility. That's number one. Number two is you can see by the action today. This is so far in the momentum stocks that should be doing really well, like the Facebooks. Facebook right now is up. Oh, it was up. Now it's down. $1.76. When the best of the best of the recent winners, Workday, WDAY, give back gains like this, and they can't rally. Let's look at Splunk, SPLK. It was up, now it's down. It hit the 9-period moving average, down 12 cents to 60.38. When these stocks give up their gains so quickly, so easily, it's saying bear market material. This is exactly what you expect in a bear market material. I got exactly what I wanted out of the price movement. Let me just show you what I was looking at here. In the, right there. In the Dow, it not only went to the 9-period moving average, it went to the faster moving average, stopped dead, right? It went all the way to 16,272. That's 260 points off the 16,015 low, recent low. That's a pretty good bounce. But to give it back in a single leg 8 to the upside would be very, very negative. And then to turn the 9-period moving average, that maroon line, into a repellent line, it didn't happen before. Now it's happening. So that for me was the test. And because the test essentially has failed, I have to now consider that long positions have to be really selective. Not only have they got to be really selective, but like we have a particular stock that's still acting pretty, it's down today, but it's acting really well from where we bought it. That's a special situation. That's just all you have to say. It's a special situation that the general market itself is just not able to hold onto the longs. We did buy a stock this morning. It's down just a fraction. It's one of the stocks that it's holding. This is very important for this particular stock to hold well. It's a cyclical stock. If it can, that's going to be very important in the rotational aspect. Oh, man, I was just talking about it 2 seconds ago. Now the Dow is down at 62, 63, and the S&P is down minus 7.71. Horrible, horrible action. The smart move has to be, as we did in my position for subscribers in the IBB, where we've got a core short from way off at the top, 3 points off the top, and we are just holding that. And the counter trend positions that we're trying to apply, some have worked very well and a couple have not worked. And I'm just saying to myself, hey, maybe the time is ripe to just forget about the long side altogether and only focus on the short side. Even you have to wait for bounces. And that A that I've printed in there in the weekly chart of the IBB shows you this is so important. Look at that trend line. This is a trend line that has not been broken. Look at that. It's now down 20, must be 23%. It's never had a 23% move. 186 to 164, 20 points. No, not even there. Not even back in May of 2013. I'll be right back. Basil Chapman, the Dow is down 58, S&P is down 7.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. the king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Looking at the IBB Weekly, every single week since it made its 275.40 high, this is the NASDAQ iShares Biotechnology ETF, back on the week of the 28th of February. Since then, every single week, including this week, it's made lower lows. This is still leg A to the downside. I have a whole bunch of techniques that I will talk about at some point later on. If this is going to make an A, and this right here is where, this is the key support area. If it closes on the week below 209, it's at 211 right now, 211.35. That's on Thursday. If it closes under that, that'll be the first time it's broken this trend line since the trend line started back at the low of the week of the 9th of November of 2012. Let me say that again. 2012, this trend line has been sacrosanct. Nothing's happened. This is the first challenge. And the monthly has broken the 9-period moving average of 220 already. So this is just not good news at all. And that's very important. Now, here's the other thing. Quick question about bonds. U.S. Bonds are doing very nicely. They're in the weekly chart. I've got this as leg F, but I would not be surprised because of this market right now that I'm going to call this a recycled leg B, alternate wave, because it's broken out to the upside, holding the 9-period moving average. That's number one in the weekly chart. The daily chart, this is a continuous contract, is in A, B, C, D. Well, it's either E or brand new leg B to the upside at 89%. I'm suspecting it's B with this kind of a market here. So bonds are acting really well. The TLT That was the question, really. The TLT is, in fact, leg C to the upside in the weekly chart, leg E to the upside in the daily chart. Could have recycled, I'm not sure. But it's very positive with stochastic at 88, MACD still expanding. And the monthly chart has finally got this leg A nicely above the resistance of the candle of July of 2013 with a high of 110.80. It's trading at 111.15, up 72. Very good action. So I needed to cover that. Let me just quickly say again, the volatility index, it's just absolutely imperative you keep your eye on this. It's acting really well. It's giving back the inverted candle with a long wick from yesterday, open and close at the price of the low. Amazing, hardly ever does that. And I'm watching this very closely for a Thursday close. If the close is anywhere close to the 17s or that 1809 200-period moving average, that's telling us higher highs, higher lows in the VIX, lower lows, lower highs in the general market. So just before we sign off, don't forget we got Options Hour, Think or Swim. We've got Paul Gigante coming up. Should be a fabulous show as always. Stay tuned, and we've got program all the way through. I'll be back with Tom later this afternoon at about 5:20 Eastern time. So stay tuned, and I wanted to also remind you that my service is the opening call. It's very comprehensive. Look at the markets. I'll tell you exactly what to look for each day using these different Chapman wave techniques, and you can go to the front page and check it out. Now, just as we're about to wrap up, I wanted to give you the price that I'm looking at in the S&P. I spoke about the Dow. The S&P, quickly. And don't forget, you've got Tiger Promotion going on. That Tiger Promotion is amazing. You get yourself 20 or 25% discount. It is really, what a way to make money. I mean, that's a great way. And so let me run through the shows. You've got after me, you've got Paul Gigante. Then you've got Daryl Martin. Then you've got Dave White. You've got Andy. I haven't heard Andy for a little while. He was away. So Andy will be back today. And then Tom O'Brien, 4 o'clock till 6. So stay tuned. Watch this very closely, because at any point, if the S&P takes out 1813, it's at 1822 right now, that's going to get ugly and retest the lows. That's very bad. So I'll be back, and we want to see if the S&P can rally into the close today. That'll be nice. Be back tomorrow. We'll be back with Tom later this afternoon. Thanks for being here.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.